Hedge funds have come under fire. We've been telling you that story recently. Underperformance in the market and underperformance in their portfolios. It could be sending a bullish signal for stocks, though. Mike Santoli has the chart. Mike.
Yeah, Sarah. So this is a look at hedge fund positioning. This is based on Goldman Sachs data from Goldman Sachs' own prime brokerage division, which services hedge funds. So the orange line is the net exposure of those hedge fund clients to the markets. So when it's going up, hedge funds are very aggressive. They have high exposure to the markets. When it's going down, they have less exposure. The blue line is gross exposure, so that means long plus short, so total positions. The net exposure, though, is how much they have at risk to market moves. What's interesting here is, of course, it's been declining for quite a while now, actually, for most of the year. But where we are right now at this net exposure level brings us back into this zone, which was mid-2016. So basically early in mid-2016. Actually, this is mid-2016. That's Brexit. And right here is the sort of diamond bottom. That's the end of that severe correction in 2015, 2016. So what it tells me is that hedge funds are a little more cautious, have a lightly positioned portfolios, which means if the markets hold together, if perhaps we get a little rally, there's a likelihood they can rebuild their exposure and maybe chase the rally.
It's interesting because when I looked at this earlier, Mike, and now, you're saying they're a little more cautious, and I think emphasis on the word little, because look where the orange line gets 2015 or so. So yes, particularly given how late we are in the cycle, I would think there's still quite a lot of room for them to become more net short as opposed to deploy more money long.
There would be more room for that, Wilfred. So my interpretation is if we're still in a bull market, if the financial markets in general remain healthy, then this looks like caution. This looks like it is probably headed higher. But if we've had a total regime shift, right, if we really are at the end of the cycle, if the markets are going to start trending lower, then yeah, absolutely. If you look down here, 2015, you were far lower, much more defensive.